talked about this on a couple of episodes in the past, and really what starts triggering investors. And oftentimes, so much is the case that when the equities market starts to climb and post all-time highs, you see all of that frenzy, and I'll call it a feeding frenzy on the news. I mean, whatever news channel it is, whatever business channel it is, all you see is highs, 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 and so that starts triggering investors, and they start allocating capital into the equities market, and now you're buying at a high. So if I'm sitting on $250,000 liquid right now, I'm looking for a physical, tangible asset, something that I can feel and touch. And more importantly, we've got huge opportunities in real estate right now because of interest rates. Interest rates have been so high for so long. You've got investors that acquired assets when interest rates were low. And we've seen a 3-year inflation period with interest rates that just so happens to cycle with what many of the bridge loans that were made 3 years ago happens to term out at. And so we've got billions of dollars of bridge loans maturing or have already matured, and lenders are wanting those off their books. For operators that have liquidity and or have the capacity to negotiate with lenders, it creates opportunities. For those that don't have liquidity, they're walking away from assets, and banks are stepping in looking to offload those assets at less than loan amount. And so this creates a huge opportunity in the real estate sector to jump in and acquire assets in a distressed market with significant discounts, because you've got a lender wanting to get a bad loan, bad portfolio off their books. And so that creates huge opportunity where, that's where you really want to take advantage. And so if you're sitting on some liquidity right now, real estate is the prime play, because we're sitting at the bottom of the trough at the, really ideal scenario where we've got distress in the market. Assets are still, we still have well under supply as it correlates to the demand of affordable housing. And yet we've got lenders that are creating an opportunity for investors that are liquid right now. So if you're sitting on $250,000, real estate creates a huge opportunity just because you're buying low in a distressed market, and you're going to have the opportunity to ride that investment up. And also, when you buy low with low leverage, it creates more opportunity for cash flow. And so this is the opportune time to really take advantage of what I call those 4 keys to wealth as it pertains to an investment, where you're going to buy at a discount, you're buying in equity, you're going to see appreciation as the real estate market resets and as the debt markets reset. When you're buying at such a discount, you're going to see cash flow, and then obviously you have that tax advantage to play along with it. So, Brian, I'm curious your thoughts.
Yeah, thank you, Ty. I think when it comes to overall investing, it's really easy for us to get in the habit of being myopic about looking at what's happened recently and kind of that last shiny lure that's right in front of us. And the reality is the S&P over the last 10, even longer years has had a really good run. I think people forget about some of the downturns that we've had in the not too recent past. In 2018, we had a downturn of a little over 6%. In 2022, there was a downturn of about 20%. We've seen a lot of volatility as it relates to the broader equity markets. This year, a lot of that's driven by some of the things that we're seeing overseas, and macroeconomic policies. And so the market, while earlier, a month or two ago, was at record highs, we're down to about, I think, a 4% positive year to date. And so it's kind of an investing 101 tenet that you want to buy low and sell high. And so we do have kind of this perfect storm where the equity markets have historically been at record highs. We are starting to see those signs of corrections. And to your point earlier, we've got a number of different factors that are creating great buying opportunities for real estate. I would touch on one other thing, and that is inflation. And that's something that a lot of us may not think enough about when it comes to traditional investing. And if you had a traditional public market investment, and let's say that that returned 10%, decent return, it's easy for us to forget that you have to look at that in terms of your actual nominal return minus inflation. And inflation historically, let's just say, is going to average 2, maybe 3%. It's been much higher in recent years. We've seen that drive interest rates up, obviously. So when you factor in, say, a traditional 10% return and you factor in inflation, especially in the last couple of years, you're looking at maybe a 6 or a 7% return. But as we all know, you also have to factor in taxes. And taxes are going to reduce that return even greater. Then you have to factor in something that we've talked about before, and that is the behavioral aspect of investing.
Yeah.
And it is very easy when markets go up to get excited and to buy in, and when markets go down to get discouraged and to buy and to sell out of those. And so your actual returns, when you factor in inflation, taxes, and just normal human activity, actually nears about 0%. And the real benefit of real estate is that you do get to lock in equity at a discount like we're seeing today with some of these significant loan discounts. And I would say it's a focus on not just income, but also income and growth, which I know we'll talk a little bit more about.